Hey, what's going on social media? I'm Steve Ludwig, also known as Mr. Insurance. Today I'm going to talk to you about a question that comes up a lot, and I'm sure you've probably heard the question asked a time or two, and that is, should I file an insurance claim or should I not file an insurance claim? So the common misinterpretation that if we file an insurance claim that we're going to be canceled on the spot, that our insurance premiums are going to go through the roof, which is in many cases not the case. Not all times, but in many cases it's not the case. So you might be asking yourself, well then how in the heck does it work? Well, so first thing is that you need to look at the value of the claim. Okay, but before we get into that, I first want to throw out a disclaimer here that this video is for information and entertainment purposes only. That anything that you do, you should run through an attorney, run it through them, run it through your insurance professional. I highly advise that before you do any kind of claims for yourself or anybody else. So that disclaimer is out of the way. So the first thing that I want to go through and talk to you about is, again, the value of a claim. So if you have a claim that is, let's say, $500 or below, and you have a deductible that's $500, then it's not really worth it for you to submit a claim in any way, shape, or form. What a lot of people don't understand is that when you do submit a claim, whether or not they pay out or not, it still goes down as an incident on your record. And what they're going to look at as an insurance company is, what does your claims record, what is your pattern, what does your history look like over a period of 5 years? And they're going to compare some other things like your age, your gender, the place that you live, all those things. They kind of all factor into that, because again, what's the question that you're asked every time that you go and you try to be able to get a new insurance policy? Well, it's, how does your driving record look within the past 3 to 5 years? How is your credit? How is, have you recently moved? Do you own a home? Do you, like, all those kind of things? They all go into it. Whether you own a home, if you have carried insurance for longer than a certain period of time, as long as there's been no lapses, all those things that play into this stuff. But the big thing to remember on here is that the first thing is that you have a couple of different claims that do not count, okay? And when I say do not count, I mean take that on a light aspect of things, but they do not count. The insurance company does not really look at them like claims. Those things are right here. Those things, the top three on that is towing or roadside assistance. You also have glass coverage, and then you have a comprehensive claim, which is anything other than collision. Now, insurance companies don't really look at that, again, with seriousness. I mean, they do, but they don't. Okay, so those things like, especially you doing the towing or the glass, but if they start seeing patterns, that's, again, the frequency in claim. It does make a difference on that. Insurance companies really like to see one claim or less per year, and within a 5-year period, they really, again, they want to see like closer to 3 or less incidents on your record. Okay, now again, you got to really take that with a grain of salt when it comes to towing, glass coverage, that kind of thing. Comprehensive, not as much. But when you actually do file a claim, you have this formula that generally goes with most insurance companies, not all, but most. This goes back to my time of being in the claims part of the insurance business. I've been doing this for over 20 years, so I just have a pretty good idea how this thing works. So if you had a claim, I'm going to give you my exact claim amount that I had a couple of months ago, and I've since gone through renewal, and this is what ended up happening. I had a claim, it was $120,000. It was a stolen vehicle. Okay, that's comprehensive. I know we just talked about that not counting, but again, remember, in something like that, that's kind of a different deal. So you have 10% of the claim, or $12,000, and then they spread that out over 5 years. And you got to look at it as well too, is that insurance companies just can't come in there and just be like, hey, we're going to give you like a 900% rate increase. There's protection laws against that. Now that's all state dependent, but there's a lot of protection laws against that. They can't just jump premiums without having some kind of context to go behind it. Now you got to also remember, if like something gets sold off and essentially what the insurance company got paid out, it all factors into that, right? But insurance companies, they work on the power of large numbers. So For the ones that don't make a claim, those cover the ones that do make the claim, and ultimately they find profit in that. So that's what the insurance company is looking to do. Now they'll have down years, like 2021, 2022 were not good years for insurance companies, but that's the reason why you're seeing a lot of these companies, they are taking pretty steep rate increases, or if states are not allowing them to take rate increases, they're pulling out of those states. California would be a great example of that. So you've got where the insurance is in play, guys. If you have a claim, file the claim. File the claim. That's why you pay for the insurance coverage, is so it's there when you need it. Now, if you have questions, call somebody like myself, an insurance professional that can guide you through that. There is a finesse, a process that goes through that to be able to make sure that you wind out on the, the top end of things. But you want to, ultimately use your insurance when you need it, right? That's why we pay for that. If it's a smaller claim like we just mentioned here before, that's something that, again, you don't really want to fool with. You just probably want to pay that out and take care of it that way. But don't do something like where you run into somebody and you say, hey, I'll just go ahead and I'll just pay this cash out of my pocket, and you write a check to the person or something, because you leave yourself in a liability spot where that person can come back and say, one, they were never paid, especially if it was cash. And then two is that person can also say that there was significantly more damage, or they were more injured than they appeared to be at the scene or something. So it's something you want to just let the insurance company take care of you. That's why you have an agent that's in play over here. For those of you that don't have an agent or somebody to talk to, the ones that have gone directly to the insurance companies, again, this is the reason why we advise you to use an insurance professional, because again, we can kind of guide you around the potholes in the road and make sure that you're not going to spend more or get things used against you. They really don't need to be used against you. We have experience in this. We know what to do. If you have questions, though, leave these down here in the comments below. I'd be happy to answer those back for you. Questions are free, guys. Unless they're stupid questions, then I'm just not going to answer you back. But if you have questions about this, I would love to answer that back. I will do as best as I can to answer those back individually.